All right. Let's get this thing going. Good morning, everybody, and welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. So today we're going to be looking at a few assets: Bitcoin, the S&P 500, the dollar, all the important things, and we're going to try to find us a trade. We currently do have, today is Tuesday, so typically we look for weekly range reversals, if you will. You can see right now, currently, Bitcoin has not really done anything since the massive breakdown we had 4 weeks ago. This week, you're very early on into the stages of this weekly range. The bad part is you were just trading above last week's resistance, and now you're currently testing that as support. The thing is we were hoping we could find the weekly low on Bitcoin yesterday, but yesterday it was a pretty vicious down day and traded to a level where essentially there just wasn't nothing to do on it. And then naturally we wake up and Bitcoin has shot all the way back up today, took out yesterday's high, and you're seeing a slight pullback. We go into the intraday time frame on Bitcoin. This is what it looks like. You can see that overnight you had a nice move back to the upside, not completely retracing yesterday's range, but you did. This is yesterday's open right here. So yeah, you have completely retraced all of this move lower, and now you're pulling back a little bit. So not really doing a whole lot. You can see for the week of Thanksgiving, it just basically traded sideways in a pretty tight range. Sunday having a very small range day and then breaking down. So the question is do we think the weekly high is in, or do we think the weekly low is in? If you think the weekly high is in, then you're going to be looking for sell trades. You're going to be looking to take entries to the downside. Here, what I'm thinking on the S&P 500 is I believe that we are making the weekly low today. Now, I could be 100% wrong on this, as always. So if you do take any trades that I call out during this live trading session, then make sure you're only risking a very small percentage of your total account's allocation of funds. What that means is I don't want you to blow up your account on one trade. Nobody knows which way price is ever going to go. I think that is a massive misconception inside of the trading community, especially with newer investors, newer traders. People assume that we know where price is going to go. We never do. But what we can do as technical traders is we have specific levels and specific entry criteria
that we search for on a day-to-day basis. Sometimes we make money, sometimes we lose money. That is the business. But yeah, you can see right now that the S&P 500 on a weekly basis has, traded all the way back down to weekly support. A lot of people are looking for this to be a bull trap because this is a bear market. So they're in the camp of assuming that somewhere up in here is going to be the top of this bear market rally, and price is going to continue lower and make fresh bear market lows, which absolutely 100% could be the case. We had a members only live stream Sunday where we went over this in depth. I mean, in depth. So basically, the Trade Talk community understands what we're looking for. And if that were to happen, we are going to nail the trade to the downside. If you're in the camp, which is in thinking that the potential bear market low is in for the S&P 500 based solely on what the dollar has done, which is the camp that I think, then you are looking for support tests to get long. We can look at the dollar, the move that we've had the last couple days, coming off the lows on the Sunday night open, had a big, strong bullish day yesterday. Today, you're getting some bullish continuation. If this is going to be the top of this current week's range, then we would look for that top to come in probably after liquidating yesterday's high, which we've done. All right, so if I put this over here, you're going to see, boom, there is no white space, or in my case, since I use black background charts, there is no black space in between this wick from yesterday's high. Now, we do have a weekly resistance on the DXY at 106.96. So if we get upside continuation above 106.74, then unfortunately we can't do anything to it until it gets to there. And then, we'll have to discuss, we'll have to have a further discussion on what we think is going to happen. Because if we do break out above 106.96, the next bullish target could potentially be all the way up there, 107.99. So right now, it all hedges on what the dollar does today. Like I said, this is your weekly range for last week. You broke down below support, but there's another support right here. So when you have multiple areas of weekly support, it's only natural and normal for price to retrace. This is also known as mean reversion. Sorry, there's a bunch of alarms and stuff going on outside, so kind of messing me up a little bit. But here we go. Last 2 days, yesterday bullish, today traded down to yesterday's open, and you are currently getting a bounce. So if you were bullish on the dollar, where would have your entry had been? It would have been 106.06. That's not in hindsight. That's how we trade over here, right? That's what we do. Remember, liquidating yesterday's high and then getting a bearish reaction could indicate that this could be the very top of the week forming. So what we were looking for coming into today's range is on the open, which is in 20 minutes. We were going to be looking to potentially buy $396 strike calls. Let me get my Thinkorswim platform up over here. All right, so here is the S&P 5, or the SPY, commonly known as the SPX. This is just an index that tracks the SPX. So basically, it's just a little bit cheaper. It's much safer to trade this than it is to buy SPX contracts. Trust me when I say that. SPX contracts moves really, really quickly. It only takes one or two of those bad boys to totally annihilate your account. So if you're going to trade the SPX and you don't want to do it with the underlying, then you would want to buy calls or puts. Understand that buying premium, 90% of all options expire worthless. So the premium that you purchase for the call or put is what you should be risking for the trade. So you don't want to go over a specific percentage of your overall allocation of capital by buying too many calls or by buying too many puts. But here, what we have on here is the options weekly expected move. This means Friday's expiration date. this calculates the expected range for the week. If we go into the trade tab and we pull up Friday's date, which is going to be the 2nd of December here, right there. That is Friday's date. If you come all the way over here, you're going to see that this week the options market is pricing in a $5.99 move. That's what the volatility and everything priced in. They figure that price is either going to move $6 higher or it's going to move $6 lower, higher from this black line or lower from that black line, simply because that's Friday's close. So that's how they derive those prices. Give me 1 second. I'm waiting on an electrician. He just got here. 1 second. All right. So thank you all for your patience. But anyways, what I was saying is you can see here with that options expiration, the weekly expected move low is 393.98. Why is that important? Well, if we come over here to the SPY, let's make this chart really big so everybody can see. We're going to pull up the weekly time frame and you're going to see right there at 395.91 is weekly support. Now, it's weekly support until price breaks down, all right? We know where these levels are, but they don't always hold. So we have to be, we have to be cautious. But this is the level at which if I thought this week was going to make a reversal, because I think it's going to be another green week, then there's a very high chance that since we're at weekly support right now, this could very well indeed be the low of the week. Now, the bounce that we got on the SPY or the S&P 500 is not nearly as big as the bounce that we got pre-market, post-market, and pre-market hours on Bitcoin. Bitcoin had a much larger bounce than you did on the SPX. Coming back over to the SPX, let me stretch it out. See, there's your pre or post market hours, intra night, if you will, your move that you had during the Asian and London session, and then coming into New York, you're having a pullback. So this level at 396.03 could be the level that we are looking for potential buys. Now understand that 396.03 is a little bit higher than 393 or the options expected range low, but it still comes in line pretty damn good, if you will. So the way that I typically will trade the S&P 500 is I am a day trader first and foremost, so I look to take positions at specific levels and at specific times, and I look to make a few dollars on that position, then I exit the trade. So basically, if you're trading options, the best way that I have found in my experience over many years of doing this is to buy a few expirations out. So these options have something called time decay built into them. I'm not going to get into that, but the closer dated option expiry you get, the cheaper the option will be, the premium. Unfortunately, the options premium will decay. So that means even if you're right on direction, you can still lose your trade. And as far as buying way out of the money, so dropping down on the option chain here, buying way out of the money means like if I think it's going to go up, then I'm going to buy $404 calls because they're cheaper. That is a dumb ass thing to do, especially if you are a day trader, because in order for you to just break even on that trade, you need price to be above $403. All right. Now you can't, these options sometimes can be bought at a price and then sold for more expensive, which is basically all we're trying to do. without being in the money, but that very rarely ever happens. All right. You need almost a massive explosion. It happens more to the downside than it will to the upside because, as you know, when the S&P 500 goes lower, the VIX goes up. So when the VIX goes up, that means that just by the simple fact of the VIX going up alone will mean that your premium on your puts will expand. You will make more money based solely on the fact that the Vega or the VIX, Vega is just another word for VIX, is expanding. Okay, so but if you're looking for upside trades, then automatically when the S&P 500 goes up, that means you're looking for the VIX to come down. So your option premium will not expand as aggressively. So you buy at the money. All right, because the money that we're trying to make is what's called the intrinsic value. That's what we want to make money with, the intrinsic value of the option. This means that even if we do suffer a little bit of premium decay based on time, or theta, it's also known as, then at least the option will still be worth the intrinsic value. So if you buy real close to the money, if you're right on directional bias, so if we buy the 397s, you can see right here on this little baby chart, we're at 396.42 on the price action chart. So basically what that means is I would be looking to buy 396 or 397 strike calls at least 10 days out. 14 days would be better. That gives you just a little bit more time on your option time decay. So you can go out as far as you want because like I said, all we're looking for is to buy a call at like 397, and then we want to see price trade up to like 402, 404. Then we can sell that option for a premium. We can sell it for more than we paid for it. There's your profits. That's where your profits are generated from. It's no different than buying the spot price of an asset and seeing the spot price of the asset increase in value. It's the exact same principle. We're just using a different financial tool to do the same thing. All right. The reason I'm focusing so much on the SPY calls today and not Bitcoin is simple. Bitcoin is nowhere. There is nowhere here for me to buy this thing. I would literally just be trying to pick a random spot on the chart to purchase Bitcoin. And that's not how we do this. We do this successfully because we have a specific thing that we look for the chart to do. And if it's not doing it, then that means there's no trade to take. Yesterday, we were watching this stuff down in here, and then we got some crazy madness thing happen about 10 or 11 o'clock in the morning, and then it sold completely off. So, I mean, very difficult to trade this. We did have a successful trade on Bitcoin to the upside. We bought it here yesterday morning during the Discord live stream. We got long right there, and then we took profits as it expanded up in this direction here based on resistance. So that's what we did yesterday, and then you can see like not even an hour later, price came all the way back down and stopped us out of the position. But it stopped us out of the position for a win. We made money. So yeah, doesn't matter if you get stopped out or not if you've already booked gains. That's why taking profits is so vitally important because we don't know what price will do. So if we get into a position and the price goes in our direction and we make money, it is super crucial and vital for you to take those profits off. Move your stop to break even. This eliminates all of your risk. By taking 70% of the position off or whatnot, it eliminates that risk. And yeah, that's just the safest way to do it. So that way, if random market violence happens, price comes all the way back down and stops you out, you lose nothing. Instead, you made money on the day. All right, so that's all we're doing right now. We're just kind of waiting for the open. Seeing if the S&P 500 is going to stick to weekly support. If it does, we will take a position and we will get long. If it doesn't, we will not. I am not buying puts down here simply because the short trade is not here. All right, let's go back to the chart. Why would you not want to get short down here? Well, the simple answer to that is because this is it. This is where the options market has priced in the low of the week. So even if you're right and you do buy puts down here, like say 394, 396 puts, and price trades down a couple bucks and you make a little bit of money, good for you. But in my opinion, you're looking at the wrong side of the market, right? The market is expected to go higher, not lower. You can see that simply by looking at last week's range. Now, looking to buy puts up here last week would have been a damn good call because now you're down this week. You see what I'm saying? But you're getting really close to where the options market is pricing this thing to turn around. Unfortunately, in really volatile times like we are in right now, bear markets have usually an elevated VIX. We don't really have an elevated VIX right now, but you can see that price does and can break down below the options market expected move. All right. It doesn't quite frequently as well and has been doing it quite frequently. This week right here, you can see that on Friday, you broke Thursday, you broke way above the expected range high for that week. So it's not to say you can't sell or buy puts down this low on the expected range. It's just not the smartest way to trade. Here, if you would have bought puts down there, you would have made money because you can see on this day, you did have a nasty breakdown. And for the biggest part of that week, you traded under that weekly range low. It's just, there's safe ways to do this and there's very hazardous ways to do it. We want to do it at the most likelihood of expectations for us to make money, not the opposite. Also, I guess since we got 10 minutes, we can discuss this real quick. Let me pull up the S&P 500. This is what we're going to be watching for potential bear markets. All right. So if we think that the S&P 500, because we trade the chart here at Trade Talk. If you are new to the community, welcome. If you're not, as always, welcome back. But we trade the chart. We don't trade our own biases because our own biases are things that usually won't make money, right? We need the chart to tell us what it's doing, where it's going, how is the sentiment in the marketplace. The candlesticks gives us that sentiment. It tells us what people are looking to do. On the weekly time frame right now, you can see that you are currently trading above and holding above the 21 exponential moving average. All right, the 21 exponential moving average is just a moving average, and it is a trending indicator. You are trending and have been trending lower. So if this is going to be the start of a reversal, if the bull market is coming back, or maybe not, maybe the bull market isn't coming back, maybe the bear market is just going away, right? There's different things that can be happening here. But anyways, what we will do is if we break down and lose this place and we do get long, we will likely be stopped out of that trade. All right. So, but if it does hold support here and we buy calls, we will make money if it goes up. But if we break down below the 21, this isn't going to be today, but like tomorrow or the next day, if we break down, then and only then can we flip the bias and turn around and start looking for short entries. And that will probably be, next week or the week after, right? When you're looking at weekly candles, that takes all week to play out. That's a longer time frame. But by looking at the weekly, I have found over my career that a lot of times you can take one trade all week long and nail a fantastic move to the upside or to the downside. And very, very many times we have actually sold the weekly high or bought the weekly low. So that's what we're attempting to do today. Like I said, I have an electrician here. The lawn guy just showed up as well. So apologies on any racket that you hear going on in the background. The new mic is supposed to cut down on a lot of that stuff, but this is what I'm looking for. If this level breaks, I would expect it to come down around this area, come back up into something like that, and then we can look for that reversal lower. But of course, we have to see that play out first. We need to see that this is indeed a potential bull trap. As of right now, you are trying to short a breakout. So, just wait, right? Just wait. If you want to be a short seller, just give it a minute for your setup to activate. Once that setup shows itself, then we can take that short trade. But until then, we have to look at the market as, no longer bearish. There's many indicators that suggest that this marketplace is no longer bearish. But we do know that traps exist. We do know that bull traps do exist. So we have to keep that on the back of our heads as well. It's not about never losing a trade. It's about winning more trades than you lose. That's what it's about. Making more money than you lose. So it's about your risk and all that. All right. So we got 5 minutes until the market open. And we will want to be on the SPY because this is what we are looking at. All right. And we're trading well up off of that $365 Friday. Remember Friday when we were looking at those big buys that took place at 364 and 365? You have had a leg down, like an expansion up from 365, a pullback, and then another expansion up. So this does looks more than just corrective to me. If we look at the Dow Jones Industrial Index, you do have a higher high, even, right? So here's your Dow Jones. Typically in bear markets, you do occasionally make fresh higher highs like you did there, but it doesn't often happen, right? Here's your first impulse leg to the downside. You come in, set a correction up, and then another expansion lower. Notice how this high did not take out that high. And vice versa. This high did not take out that high. This one did, and then we had that expansion lower, set in a double bottom, and straight back to the upside. So you have taken out that high. You did liquidate it, and you are now rolling over. So if this was nothing more than a liquidation on August's, or what is that? Yeah, August's high, then you should see the markets melt from here. All right. And if it does, we will be on the right side of the trade, guys. That's the beauty of this. You do not have to rush into anything ever. Let the setup come to you. The monthly candle on Bitcoin looks like garbage. And you got, 1 day left on the monthly close. Today is the 29th. Tomorrow will be the last day of this month. And it does look like it wants to close lower. The level that we are currently watching would be weekly demand and then weekly resistance. I have that marked out with a WR and a WD. We don't care about moving averages intraday, so let's get rid of that. But you can see here, there's weekly resistance here, and then there's weekly demand here. So those are like only the two places that we could even think about taking entries, even if you look at the daily range. So the daily range has already happened today. So if you're looking for shorts, where's a good spot? Yeah, weekly resistance, right? You've already liquidated yesterday's high. So if it is going to roll over, weekly resistance could potentially be that spot. Where would you be taking profits? I strongly suggest you take profits at weekly demand if you do indeed take the short, or if you've already taken the short, like on this retest of weekly resistance, for instance. Is that a legit trade? Yes, it is. Will it work? I have no clue. But if you did enter there, this is where you'd be looking to take profits because you could absolutely get a bounce from there. If price gets back above weekly resistance, then we can watch this candle's close for potential bullish entries. All right? This candle. Because if this candle gets back above and closes above, then that in turn sets this candle as intraday support. So then we will watch hourly closes from that point forward to see if we get any of those hourly closes back under this. If we don't, then that's a strong sentiment guide, a gauge, if you will, that people are indeed buying this as a pullback. And there is the bell. So let's just do it this way for now. Right here. So you can see this is it. Let the first 15 minutes kind of play out, because what's going to happen a lot of times is you're going to make a fresh daily low. There is no big news today. We do have big news Thursday and big news Friday, and PCE Thursday, and then non-farm payrolls Friday. DXY pushing back above that level that we were looking at. So let's see if this is the S&P 500. You've gotten below pre-market lows now. So you would be thinking about buying 396 calls. 396 calls. 396 calls is about $5.44 as of right now. Naturally, if price goes higher than that, then those calls will get more expensive. But just give it a second here. Let the floor come in. Over here, we want Bitcoin up on the chart. And now you're making a fresh low. This is not a fresh daily low on Bitcoin. That's what I mean. Like, you're literally in the middle of today's range on Bitcoin. In my opinion, there isn't a trade to take on Bitcoin. And if the SPY keeps on melting, there's not going to be a trade for us to take on it either, right? I didn't short Bitcoin right there because Bitcoin there's a lot of on-chain data that could suggest that we have seen capitulation on Bitcoin. And if we have seen capitulation on Bitcoin, then we're not looking for shorts, we're looking for longs, right? All of this is just my opinion also. You may have a different opinion than me. You may think that Bitcoin's going to zero. If you do, that's fine. You're here to learn how to be a day trader, not to have longer term biases. We don't give a shit about longer term biases. All right, so I'll go ahead and see if I can go ahead and buy the 396 call. And then if it starts to melt, I would just resell that for a loss. We're not going to do that live on the screen, naturally. But if we did, it would look something like this. So we would be looking for a setup. We're looking to buy 396. So we definitely want more than $1. But this is something, since we're buying them 10 days out, this is something that we can hold, longer than a day if it does indeed go our direction, which is up. Buying Bitcoin right now, if you wanted to buy Bitcoin right now, you could, and you could set a stop loss right there. Will it trade work? I don't know. But that's how you could manage your risk. Or you can wait until the hourly close. You can see there's not much of a good long setup there because you got to take profits there. That's resistance. The resistance on the SPY is up here. So it's a little bit further. But this is also, like I said, this is a trade that I'm looking at as potentially catching the low of the week. So I can set in this for at least a week, right? All right. As soon as that order gets filled, and there it is. That is Village in the Village. So that trade has been filled. I do now own 396 calls. I am looking for this line to hold as support. In 30 minutes, I will know pretty much if it is going to hold or not. Well, I won't know for a fact. I will only halfway know. I won't know anything It'll just be a little bit more, you know, I don't know what you could say even. It's not even confirmation because the very next hour it could fail. All right. That's just how stuff works. But if it does hold, that'll be good because what that tells me is that you haven't been able to close an hourly under that weekly support level since last night or since yesterday. And that's a pretty nice reaction there off of that level. So if you didn't believe me at first when you heard my voice on this YouTube channel that these levels do work, just look at that. Look at that close right there. Now that the marketplace is open, that's a 5-minute candle. And it is respecting that weekly level for now. But in order to make any money on the trade, I would need, because buying, like, it just depends on how many calls you buy. Each call is worth up to 100 shares. So, this thing moves $1, then your calls are going to be, losing value pretty quickly. Same for the upside. If it goes up $1, you will be in profit pretty quickly. So we'll just give it a second here and see how this plays out. Bitcoin looks like it is trying to reject at the weekly resistance. These levels that I have up here, these are objective levels. They are not subjective. They are not my style of support and resistance. It is the marketplace's support and resistance, right? They are objective price points. So that's why they work better than, say, just drawing a random line on the chart somewhere that you got 40 wicks into and calling that resistance. That's subjective. You want to do it this way because this way you can take entries based on those price points and you will know, pretty quickly if you are right or wrong. Like I said, if price drops down and starts melting under weekly support, then we have a slight confirmation, I guess you could say slightly, that it may want to look for lower prices. And then we know we don't want to be long, right? We don't want to be long if the market wants to drop out of sight. Bitcoin's chart doesn't look so great for a weekly upside expansion on the weekly, but the S&P 500 does. So that's why we're kind of looking for the opportunity in the S&P 500 instead of Bitcoin. It would be nice for Bitcoin to have a weekly upside expansion from where it currently is, given it's at the top of the weekly range. But I would much rather buy something that is lower than the weekly high. So once again, depending on where this hourly candle closes will determine whether or not you could potentially watch this candle's close for support. So what you would do is it would look something like that, right? But remember, the opportunity to here is about all you got on Bitcoin. Because that's the high. That's the high hour close inside of today's range. The high hour close is resistance. Good mornings. A lot of good mornings. Not really a whole lot for us to do right now other than just wait. It doesn't look very bullish on Bitcoin. I give you that, right? This is a pretty nasty drop here. And if I was going to see Bitcoin prices rise, I would have wanted to see it hold support right there. But once again, it just did not provide a trade setup because right here is as far as I can expect price to go, because that's the range the marketplace has already shown us the willingness to trade inside of. So those are your high likelihood areas to be an operator. Last hour, we dropped out of that range. So it does look like it's leaning more to the downside. If one wanted to, you could actually take the short now, throw your entry in here, use the top of this candle as your risk, and then your setup would look similar to this. You'd be using that candle as risk, and then dropping all the way down to weekly demand would give you a 2.5 to 1 risk to reward. Bitcoin has lost its correlation with the S&P 500 thanks to FTX and BlockFi and all these other shitty exchanges. They're the reason why Bitcoin is no longer trading as correlated to risk as it was. I do honestly believe that correlation will come back. So it just makes more sense for me to look for longs on Bitcoin right now instead of shorts. So I wouldn't be taking this short trade. I think that this correlation will come back. And if it does come back, then what that means is you're going to see a pretty damn big price expansion on Bitcoin to get that correlation back. So you'll see Bitcoin have a big repricing back to the upside to get that correlation back. This is not my setup. My setup is 396. What price? My setup, I got filled roughly about there. And I'm, like I said, if I'm right, if we have a big bullish day today, then more than likely, well, I will take profits. I will sell, a portion of those calls that I bought. I will sell them and leave like one on to catch any potential upside continuation. That way I can get all of my risk off the table, or most of it, and then just leave a very small portion on, because I will book gains to the P&L, which is what that's all we ever try to do as day traders. We're just trying to book small wins. We do it consistently, and then over time we make money. Yeah, it was a while. I didn't do any public live streams last week because it was Thanksgiving week, right? Not a whole lot of volume in the markets, not a lot of liquidity. Markets were trading sideways. I mean, it's just best to not trade during those times. But I'm back. We're back, and we will be back until we get closer to Christmas. Same thing will happen around Christmas. Short, there's no base entry for the short. 454 is where I would want to potentially take the short if I had a short side bias, but I don't know that it gets back up there, right? And the only reason for that would simply be because that's your old support. That's the breakdown. That's where you broke down. So we look for the mean reversion to get back to there, and then you could just market sell there. That would make your risk to reward better, as your risk would now be above that. The dollar above 106, remember, above 106.74, this thing can fly. 106.96 would be your next place. And then ultimately, you could see it get all the way up to 107.993. And 107.993 is still in line with the blow off on the dollar. All right, still in line with it. You could trade all the way back up to 110 and still resume this near-term downtrend you have formed already on the dollar. The reason we were looking for a bounce here is because it's the 200 simple and exponential. Those are areas where, you can find support. Right there's your 200 simple right through there. So that's why you're getting a bounce on the dollar. And if the dollar continues its upside direction above 106.74, we expect 106.96 and then 106.799. So, yeah, looking at the S&P 500 on the SPY, we've already made fresh daily lows. I do not have a stop loss when I took the position. I'm risking all of the premium. That's what I'm risking on it. So it's a little bit different, but the principle is the same. If it continues to make lower closes, I will just sell it back for whatever I bought. I'll sell it back to the market for a small loss. I won't eat the whole loss. But I want to give it time too, because, there's an old rule that a lot of your older pros in the stock market, day traders that they know, like in the SPY and other stock market assets, the high or low usually isn't in until around 11 a.m. So you got until 11 to decide if you're wrong. But you don't typically want to wait too long, because if you're making fresh lower lows and lower low after lower low after lower low, then naturally your value on that premium is decreasing drastically. Remember, this is yesterday's high. That's all it is, just yesterday's high. We call this the liquidation break. When you liquidate a previous day's high and then then do a reversal, right? It's a liquidation break. It just means that the marketplace is just searching for liquidity here. It finds that liquidity and then it reverses. If that plays out, then Bitcoin will go higher. Then this should go higher. If this does not play out, if it finds support down here and starts to reach for 106.96, then we know we're wrong on our trade and we need to close it. It does look like we are wrong for now. Well, we're still sitting in really good shape as far as, the loss that we're taking. It's nothing yet. Nothing. Because we bought the $396 strike. So we're just 50 cents, 40 cents under that. So we're okay. Good mornings. Good morning. Saul, please. And ADA. I guess we could, since we're not trading Bitcoin, we'll look at it up there. We do trade Bitcoin most of the time. There just wasn't a setup on it today. Here's Cardano. Cardano looked better for a setup, but unfortunately you're under support. And as long as you're under support, it makes it difficult to take that trade. You also retested support and rolled over. So it looks like Cardano wants to see downside continuation, but it could find support here and then rip. All right. This will likely do whatever Bitcoin does. And once again, the month looks like shit. I mean, it looks bad, man. You're currently trading under last month's low. So this doesn't look like a liquidation break just yet. You would need to get back above last month's low before I think I would even think about looking for longs. Really. Yeah, so I think you got some time to wait on Cardano. And then Solana, you just probably want to stay away from, because isn't that the one that FTX owns so much of? Yeah, I mean, Solana looks like a short. Solana at no point has looked bullish to me. No, Bitcoin doesn't look bullish to me either, guys. Right? It just makes more sense to look for bullish entries down here if, if we have seen capitulation. If we haven't seen capitulation, then Bitcoin doesn't look like a long either. But this thing looks bad. Your trade short entry would be 1402. Take profit 1332. Not a big mover. But naturally, in the crypto world, everybody offers a ton of leverage. So that would be a decent short. Yeah, it'd be 5%. So yeah, do the math. That would be a big trade. But I would probably, yeah, I mean, if you want to buy them and hold them because they're your favorite shitcoins, then hang on to them. Eventually, they'll probably be worth a lot of money, or more money than they are now. But right now, I mean, that was a devastating drop, and then you haven't done anything. You had a lot of volatility for 4 days in a row, and then volatility just dropped off the planet. That's likely because nobody's interested in buying crypto just yet. But they'll likely move however Bitcoin does, because that's typically the way these things work. If Bitcoin becomes bullish, they will. If Bitcoin continues to be bearish, they will do the same thing. What's up, Heath? Can we have a look at CHZ? Now, that's one that has been doing its own thing. It's been trading on its own merit, based on some NFL news. But I mean, it got crushed too. It had a nice little uptrend going, but unfortunately, the FTX news crushed it. The short trade on that was so easy. I missed it, is all. But you had a clear and obvious short setup right there. Just as simple as that. It would have been so easy. That's your supply. You could have taken the entry on either day. We would have waited for the liquidation break, wait for the previous day's high to get smoked, and then enter. And as you could see, you'd still be making money on that. Yeah, there's just not many cryptos to be, buying them cheap is, you're in a good spot to look for buying them cheaper. On this, you're still off the lows of a huge amount. You're still off the lows on this by 100%. It has retained some of its value from the June lows. But like I said, this thing was trading on its own merit. It had its own news. Some kind of deal with the NFL. How about a short trade on USD It's showing. Naturally, I think the USD trade, USD is a good idea to look for shorts. But what you have to do is you're going to have to wait on the dollar to find resistance on this current impulse. So basically what I mean by that is, yeah, we do like a lower dollar for now, but you got to wait. See how you're trading at support right now? If you get short now, what you risk is you risk selling the bottom. So what you need to do is you need to wait for it to find resistance. There are two prices to watch for potential shorts, one being 139, 164. As you can see, that played out yesterday and today, so I don't know if I would look for it to play out again now, because you could be retracing that. But yeah, if you break down below 138.59, because that is your current, and that's your current range, then you can watch for resistance at 139, 173. I just don't see a trade on it today. And then naturally, if the dollar continues up today, then on the DX USD JPY, watch 142, 104 for that short entry. But yeah, I like the idea of lower dollar for sure. We shorted the USD JPY at the top, at the very top, expecting the dollar to roll over. So remember, the dollar last week traded into the 200 simple and the 200 exponential. So we are and were expecting a bounce on it. We did get it yesterday and today. So if it's going to roll over for the week, then it could roll over from here. But you can see on the DXY, you're not in the middle. You're in the middle of nothing on the weekly. So that's why we got 106.96 outlined. So if the dollar trades up to there, then you can watch it. But yeah, that was a big week, a big down week. That's what we call blow off. Looks like a blow off to me. So now what we need to do is we need to wait, let the dollar have its correction. A correctional phase can last for, several days to weeks, sometimes in some cases. If it is going to continue lower, we would expect it to do it at least about 107.99.93. So if it continues above this, then this would be my next upside target. Then you would be looking to short this thing, right? Because then it's had a nice size correction. It liquidated that down week. Above it, yeah, then you just got to wait, because then something else can be going on, right? This could just be a larger correction. Remember, if the bear market isn't over with, because, it is still a bear market until it's not. If it isn't over, then this is going to be a buying opportunity on the dollar. A lot of people are going to be buying this. That I think your trend has changed, but that doesn't mean I am right. It never means I am right. I have opinions. Everybody else does too. So you can bounce all the way up there, man, and still keep your downtrend. You start making higher highs on the dailies, then you gotta wait. Like if you take out this swing high and you get bullish continuation, then you gotta wait until this swing high gets played with. But all in all, I mean, you're at daily res. So if you want to short the dollar or the USD JPY, then yeah, as long as you don't close the daily above that, maybe you go lower. I just don't like the short trade on it. Like I said, try to learn how to trade the way we trade and not the way retail trades. Retail would be selling this because retail loves to short the lows. You know what I'm saying? It's just the way retail thinks. They think they're missing something, which you have. You missed a freaking 800 pip move on this already. you have missed that. But if you get that correction, it will. I still like it lower, for sure. Yeah, I'm short it, and I'm gonna hold that short because I think that short's gonna be the best short probably of 2023. Because look at all this. Now I don't expect it'll give all of that back. I don't know what to expect, right? But if it does give a lot of it back, then that's going to be the best short trade to take, or would have been. I took it. It's not in hindsight. I did short it at 151. 152, I think. I don't know where exactly. But it's, I mean, I'm still sitting in the position. 151.79. That's where my short is. 151.79. And I shorted that based on the dollar. Not this. This did not have a technical setup. The dollar had the technical setup. This didn't have anything. This was screaming to the upside. We did close lower here. So now this hour is going to be vitally important on this asset. I would probably wait on the short, my friend. No, I don't want this. I want this one here. Yeah, see how you're red on the week? I mean, I guess I do kind of like that. The problem with it is you liquidated this low and you're getting the bounce. This is technically, it is technically a, a supply zone. I mean, you could try it for sure. Look for short entries 138,779. That's all I do, man. Nobody can tell you what price is going to do. I don't know what price is ever going to do. I just know what areas to take those entries at, and then time lets me know if I was right or not, right? I can't see into the future. I wish I could. If I could, I would be the richest man in the entire world. I would be hanging out with the likes of Elon Musk and Jeff Bezos if I could see the future. I just have a good nose of sniffing out in opportunities, I guess. Sometimes my SPY trade ain't working out that good right now. So we'll see what happens. Win face reveal. Didic Diablo. All you got to do is go on my channel. There's a video that says trade with Oanda on TradingView. Click that. You can see my face. I just had my camera broke and I haven't gotten around to getting a new one. That's all. I mean, I'm not afraid of revealing my face. It's already been revealed. It's the biggest video I got on my channel. It's got like 30,000 views or something. Just click that one and boom. Face revealed. So let's get Bitcoin back up over here because I do want to watch it. We did have an hourly close just now. Yeah, and that hourly dropped, right? So, yeah, doesn't look like it wants to be along today. And since that's the case, yeah, you can see how that wick traded right up to there, right? Like I said, there. So if you did take that short, remember your profit target is 162,298. You take profits and you don't wait for price to get all the way there. You got to front run that position. I would take profits probably. I would take profits myself at like 160, 16,310 or 16,315. Just a little bit below this wick. I would take profits and move my stop. So yeah. What's up, K4 Liberty, my friend? How do you get the expected range? Run mountains there. you're in the Discord, all you got to do is go to the Stonks channel, click on the, yeah, it only works on Thinkorswim though, if that's what you're asking. Yeah, it only works on Thinkorswim. Just click on the pinned messages. There's a link that was shared. It's already been shared. It's not my indicator. I did not build it. I got it from TheoTrade. They have already shared it. You can get it directly from them. Or I think if you just go to the shared community inside the Thinkorswim platform, you can find it there as well. And it's just called TheoTrade. What's it called? Here, let me find it. Go back into charts. Edit. This right here. Shared underscore TheoTrade underscore expected move. And then there's a certain way to set it up. If you do get it, right? If you do download it and get it, you want to make sure all of these are turned to no. Otherwise, you'll have a bunch of orange bubbles hiding everything. So you just click as in the settings cog, turn all these high-low bubbles, all these bubbles off. Click no on them all. Okay. Okay. All right. All right. We're gonna have to wrap it up, everybody, because I was just told by my electrician he's gonna have to break some breakers. So we're gonna probably lose the connection here. But what we're watching still is I'm still holding the 396 calls. I will hold it at 11 o'clock today. It's 10 o'clock now. So in an hour, if you are making fresh daily lows, you can go ahead and close that position because I'm more than likely wrong. I do like this. So yeah, if you make a fresh daily low, exit the position. And then we will see you. Maybe we'll do a live stream tomorrow for the public since we have to cut this one short. All right. You guys have a fantastic day. Thank you so much for your time. As always, make sure you guys trade safe. Make sure you trade smart.